Powell from the Fed may not lower interest rates, but they just made some big crypto history. The Federal Reserve officially ends reputational risk oversight, easing on crypto banking regulations. So in the past, the Fed was like, no banks, you cannot engage with crypto any way, shape, or form. We don't like it. We think it's bad, blah, 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 blah. Then we got a pro-crypto administration, pro-crypto SEC, Bitcoin and Ethereum spot ETFs approved, about a 90% chance that other crypto spot ETFs will be approved, XRP, Polkadot, HBAR, Avalanche, you name it. Yes, Solana too. And I also think this comes from the Genius Act getting so close to getting approved, which is the Stablecoin Act that kind of defines what it is, indicates what stablecoin issuers can and can't do, that it needs to be backed, blah, blah, blah. And then the Fed came out and said that banks can engage with crypto, which makes sense, especially if the Genius Act gets approved, which it probably will. Because if stablecoins are heavily regulated and backed and have to provide quarterly reports and kind of act the same way banks do, it would make no sense for them not to incorporate stablecoins or just crypto in general, because the laws and regulations that we're getting are now basically supporting and giving guidelines for crypto to operate in the USA. And that's all that the crypto community really wanted, was like, hey, can we do this? Can you just not go after us unjustly like the SEC did with Ripple, Coinbase, Kraken, Gemini, and just so many other good actors in the space. But also too, the US dollar is under attack. Just last week, it was reported that the United States of America is currently in $37 trillion of debt. And remember, with cash, they can just continue to print this stuff, but with crypto, not necessarily, primarily Bitcoin. And also because everything is becoming so digital, if you think about it, we don't use cash for anything. We use credit cards, debit cards, Apple Pay, Google Pay, whatever type of pay, Venmo. But things are all digital. So the Federal Reserve really just going to have to step up and make some changes, which is why we're seeing the adoption happen when it comes to crypto, stablecoins, and digital payments. And the fact that banks will be able to actually interact with digital assets is a massive milestone. Yes, it does take a little bit away from the decentralization movement, but at the same time, if we want adoption, we have to compromise. And kind of back to the debt that we're seeing in America, financial innovation will help the US economy. Because anytime you innovate a sector, whether it's old or new, and you make positive changes or changes in general, that means money's coming in. So not only will banks worth billions and trillions of dollars that have access to millions and millions of people be able to essentially integrate crypto, stablecoins, or digital payments, but this will also help all the businesses that use those banks be able to utilize the same services and their customers. But they're going to be doing it in a fashion that's legal, to where things just work. And there's also a survey done in 2023, which is pretty interesting. But it said that Bank of International Settlement study shows 60% of central banks were exploring digital currency framework, including a global trend towards crypto integration. And in addition to this, we're also seeing like NASDAQ listed companies incorporate crypto into their balance sheet or their treasury. And all this really shows is that at the end of the day, crypto has won. Our voices were heard. And really just the fact that the Federal Reserve is kind of being more bullish on crypto and being more open-minded not only tells us how big of trouble we are when it comes to the United States of America economy, but really how much financial innovation we need in that particular sector. And it's kind of good when you think about it, because this just kind of gives people more leverage, especially against these big financial institutions. And this also just reminds me to remind you to pay attention to tokenization, RWAs, because all of this is going to be integrated into payment, to banks, to money, etc. Everything's going to be on chain, where it's a public chain or a private chain, but that's exactly in the fashion that we're moving.